Good morning, everyone. So, yesterday was a nasty break to the downside. Um, I had mentioned several times that, I told our subscribers, and it's marked here on the chart here on 724, that we had gotten our first sell signals from the first buy signal that I had sent out on November 6th, the day before the election results. That being said, without the sell signal, you having to be aware of it if you're familiar with failed patterns. What I've marked there as a breakout failure with a topping tail, that's the signal. So our market internals give us a heads up. They do not give us a in the moment, act now signal. They tell us that sentiment and breadth have reached an extreme, and that you should now be, aware and watching for some signal that suggests that this is the moment in time. So we got that a few days ago at the beginning of the week, and this is what I call a failure pattern, a shock pattern. It's a pattern that catches traders, investors, hedge fund managers, whoever on the wrong side of the market. 1 second, guys. And just to get an idea of this, just imagine you buying this breakout and getting caught in something like this. What would you do? So news aside, we know the news that was revolving around this break to the downside here. As technical traders, we look at what's happening within the markets. We look at intermarket analysis, and I said market internals, and then we look for the actual price action type of signal to act, and that's what we had here with this breakout failure topping tail. Now, we had this initial void below, meaning a momentum move up, and no support. And you say, well, here, what is all of this, Greg? Well, my rule through studying tens of thousands of charts, if not more than that, how to interpret price action and come with some guidelines as to how to discount, if you will, what's to the left here. The rule is if it trades below and above, it's been neutralized, meaning it's been used as a reference point in two ways, and then this was followed by a momentum move higher, which creates this void. And down below here is another void. So this is our major support level, and we shall see, if this is going to hold. I suspect that it definitely will hold in the moment, and as you can see right now, this is a live candle that's happening right now, and the futures are moving up, and this isn't unusual, after having a big down day like this. So now what we do is, without looking inside of this candle to see how it formed, just a general guide I teach students is, look, as long as this stays in the lower half of that candle, this candle is still in effect as a powerful move to the downside, and prices should go lower. I just want to get another one here. Duplicate. Okay, so then the weakest of moves, or the ones that are the strongest, will stay in the lower third, or 25% of this bottom candle. And in this case, the 50 MA is in alignment with that. So this would be a pretty strong reference point if prices moving up to stall at that point there as it relates to the S&P futures there. And then, if you look at the spiders, it's probably going to be, give or take the same thing. Right? So the NQs here, right? We went over in other videos the extent of these prior moves, and I pointed out that this was probably an area where this would stall, and we had the internals in alignment with that. And then here was your topping tail here. Not as clean a breakout failure as the S&P, since it didn't clear the prior high or move into an all-time high. Nonetheless, it broke above these most recent highs and formed a topping tail candle, and this has a void below. Notice it cut through the 50. Very little to stop it from going to the downside, so we'll see. By the way, these terms, if you're not familiar with them, void, topping tail, these are all part of, the educational process that I've been teaching students for over 25 years. And you probably would hear prior students that are educators in the industry using this terminology. And that's one way to know that they're students, right? They all talk about voids and topping tails, and some make up their own names. I know one student, they call this a red dog something or other, topping tails and bottoming tails. So, I've had many students over the years that have become, fund managers, investment advisors, educators, and such. And, visit mastertrader.com. We have a free course there that you can check out, take a trial to some of our services, and start learning to become a master trader yourself. So Dow, let's look at the Dow here. Stopping all right on its rising 20 MA. But let's look at the diamonds here for a second. Right, you see these, you got to look at these unfilled gaps in, other ETFs. And here's the 20 here. These overlapping bars right here, that's where your support is. And this unfilled gap, and the Fibonacci's, how the word goes, they'll do their measurement from here to here and say, oh, look how my fib lines lined up there. Well, fib lines 99% of the time are going to line up with some area of support. And so there's no magic in the markets as to, drawing from one point to another dot and then mysteriously finding some hidden support in the markets. Right? It's just about looking to the left. It's right there for you to see. Oil's down a little bit here and chopping around. Possibly it was going to move up, but it's just stalled here. We'll see where that goes. And bonds, not really doing much here, kind of churning their way up. But gold, right, is starting to get some talk about gold here since they've had this nice move off of the low, but they're right up near the resistance. In other words, it's forming a sideways channel here. So the question at this point, right, from an intermediate term point of view, is what is the reaction here? So it's always how do prices react when they get to resistance? And obviously these were more bearish reactions, and this actually held more bullish and begins to create a channel, right? Support and resistance. Now, is it going to go back down here? Well, I don't know yet. But what this will do, what I would look for, and what you can look for, if it's potentially going to go higher this time, is that it'll go sideways in this area. And don't take what I'm drawing here as the length of time, just to make the point here that if it went sideways, the idea here is that here's an area, we call it resistance. Another way of looking at it is it's supply. Supplying, this is where sellers are. So can buyers demand, absorb this supply that we know that's going to come into the market? You can see it's coming in right now. And rather than correct through price, it's going to correct through time, and that's bullish price action that would suggest a move up. So when do you know when to act? Well, here's a bottoming tail bar. And just like those breakout failure bars that I showed you, if you were to get one here, that would be your moment in time to act and buy, and then look for it to go higher. And the next step in the process that I teach students is to ask, well, go higher to where? Well, you look for the next reference point of resistance, and in this case, it's quite a bit higher. So it is an interesting point in time to be looking at gold, because it has the potential to move significantly higher if you get that bullish price action here and then a break to the upside. We'll be keeping an eye on that, and gold stocks and such. Happy Friday, guys. Have a great weekend, and we will talk next week.